Did you know some crypto stocks are outperforming traditional stocks by a staggering margin? So in this video, my AI assistant TR and I are going to break down the top performing crypto stocks right now. Plus, we'll uncover the one common pitfall that many investors fall into with crypto stocks that could be costing them thousands, tens of thousands, even hundreds of thousands of dollars. So to begin, well, actually, Tiara, where do you think that we should start?
Let's just jump right into the stocks.
Okay, can't say I disagree with you there. So you wanted a list of the best crypto stocks, and that's exactly what we're gonna jump into. So Tiara, what is that first stock?
Coinbase Global, ticker symbol COIN.
Sounds good, sounds good. And before we jump in here, I do have to give a quick disclaimer. I'm just required to say, this video is for educational purposes and it is not financial advice. Anyways, so the ticker symbol here is COIN, and it's the very well-known crypto trading platform Coinbase, which technically has a name of Coinbase Global. So this crypto exchange, it has been on quite a ride lately, right? So its stock price, it soared over 106% in the past year. Coinbase has really become a behemoth with a market cap of $78.56 billion at the time of this video. So to put that in perspective, that's bigger than some of the really well-known traditional financial institutions, like US Bank, for example. Coinbase is currently trading at a PE ratio of 46.59. Now that might seem high if you're used to traditional stocks where that number is usually around 15 to 20, but in this world of crypto, it's really not uncommon to see higher ratios for companies that are, really have strong growth potential. Wall Street analysts are also pretty bullish on Coinbase. So they're projecting that the price targets are ranging from 150 all the way up to 420. So I just have to laugh a little bit. 420, it's interesting they picked that number. Anyways, so what is it that's driving this optimism, right? Well, Coinbase, it's right at the heart of the crypto revolution. As more people and institutions get into cryptocurrencies, Coinbase really stands to benefit as one of the largest and most trusted exchanges that exist. But of course, nothing is a guarantee, as they're always facing some type of regulatory challenges, and that could really shake things up at any time if it actually hits.
Regulatory issues? Oh, the drama humans create with simple digital tokens.
Yeah, no kidding. So we can thank the government for that one, Tiara. Hopefully, you and your AI friends can fix our painfully inefficient government. Anyway, the way I see it, right, is that Coinbase is by far the largest crypto exchange trying to do things the right way with the US government. And needless to say, they're hitting a lot of snags along the way. And I think that this is kind of expected, but the way they're doing things is also building trust with the public, because most folks feel that they are in full compliance and doing whatever they can to grow the crypto market as a whole. Next, we'll be talking about a company that's made some of the boldest moves in the corporate world when it comes to Bitcoin. And honestly, you've probably heard the name before. So Tiara, what stock are we talking about here?
Michael Saylor's company named MicroStrategy, ticker symbol MSTR.
Yeah, so you've probably heard of MicroStrategy, right? It has been on an absolute tear. In 2024, they had their stock price increase by 546%, which is just insanity. But what's really driving this incredible growth, right? That's the question. So MicroStrategy has essentially transformed itself from a kind of boring business intelligence software company into a Bitcoin powerhouse with a very outspoken evangelist as the CEO. So as of November 2024, the company holds nearly 2% of the world's entire Bitcoin supply. And this massive Bitcoin holding has really propelled MicroStrategy's market cap to a whopping $99.4 billion at the time of this video. So theoretically, this means that if Bitcoin's price reaches $138,000, which it very well may, MicroStrategy could surpass the market cap of Starbucks. And MicroStrategy isn't just sitting on their Bitcoin holdings, right? They've actually developed a very unique strategy called the BTC yield, or Bitcoin yield, which measures how quickly they're accumulating Bitcoin compared to issuing new shares. Now, I'll spare you all the technicals around this, but why should investors care about MicroStrategy? Well, it's essentially become a stock where investors can invest in Bitcoin as an asset without actually buying Bitcoin itself. So this means that institutional investors can get indirect exposure to Bitcoin as well. Plus, for retail investors, it offers a tax-advantaged way to invest in Bitcoin via retirement accounts. But before you go ahead and just kind of rush to buy MicroStrategy stock, realize that there are definitely some real downsides there as well. And the biggest one is that MicroStrategy's fortunes are now closely tied to Bitcoin's price movements. So a $1,000 move in Bitcoin's price translates to about 440 million in the change of MicroStrategy's market cap. And in addition, MicroStrategy continues to leverage itself to buy more. So they have issued $7.2 billion in convertible debt to fund its Bitcoin purchases. And of this, $4 billion effectively functions as equity due to its strike and call prices. So this gets technical, but they're basically raising money now and buying Bitcoin with that money to offer those who they fundraised from a discount later on the price of the stock. Hopefully you followed me there. It gets technical, but it's a unique and interesting way of just buying more and leveraging more to get more Bitcoin. Of course, the risk here is that if Bitcoin's price drops significantly, MicroStrategy might struggle to repay the debt, and then the convertible feature might become less attractive to bondholders. But by using this, what's called intelligent leverage, as Michael Saylor, who's the CEO, calls it, MicroStrategy aims to maximize its Bitcoin holdings while managing financial risks. However, it is a very high-stakes strategy that's closely tied to Bitcoin's price movements, and we'll really have to see, how this all plays out.
Leverage to buy Bitcoin? It's financial roulette, but with corporate flair.
Admittedly, this wouldn't be my move, right? It wouldn't be something I'd do. I appreciate the undying optimism that Michael Saylor has for Bitcoin, but it's definitely risky, and it's just my level of comfort, absolutely not. But hey, power to him. All right, now that we've explored MicroStrategy's bold Bitcoin strategy, and bold is definitely the right word for it, I'd say, let's shift gears to another exciting player in the crypto space that's been making waves in the Bitcoin mining sector. Tiara?
Next is Marathon Digital Holdings, ticker symbol MARA.
So Marathon Digital Holdings, they saw their share price increase by 87% in 2024. And Marathon Digital, it isn't just any crypto company, right? They're actually one of the biggest Bitcoin miners in North America. So first off, let's talk about their recent performance. So in Q2 of 2024, Marathon saw that its revenues jumped by a whopping 78% to 145 million. But here's where it gets a little crazy. Despite the revenue boost, they actually reported a net loss of 199.7 million. So the question is, how does a company lose all that money when their revenue is growing so much? Well, unfortunately, a big part of it just comes down to the volatility nature of cryptocurrencies in general. So Marathon took a $148 million hit due to changing fair market value of its digital assets. Now, on a side note, I can't even imagine owning a business like this. Crypto is notoriously volatile, so the ups and downs of that business would just drive me to an early grave. It's too risky for me. But anyway, beyond this, it's also important to understand that Marathon, they're not just sitting back and watching the crypto markets, even with everything going on, right? They're actively working to improve their operations. So for instance, they've been ramping up their hash rate, and which basically means computing power that they use for mining, right? In Q2 of 2024, they increased their hash rate by 78% compared to the previous year. So in theory, they should be able to mine more. But as you may know, Bitcoin gets more expensive to mine over time. So I wouldn't say it cancels it out, but something to consider. But Marathon isn't just looking, at Bitcoin and mining that. They're actually exploring new ventures like mining CASP, which is another cryptocurrency, which they say has achieved an over 80% profit margin. Now, they're also getting into data center co-hosting to monetize more of their computing power, which makes sense. And they're getting very creative in Finland as well, where they're actually using, this is pretty neat, they're using the heat generated from Bitcoin mining to provide energy to 11,000 residents. Now, of course, they've faced challenges as well, including some equipment failures, maintenance issues, etc. So on one hand, Marathon is showing some really impressive growth and innovation, but on the other hand, they're dealing with the inherent volatility in the crypto market. So it's definitely a stock that I would say, watch, but as with anything in the crypto world, it comes with its fair share of risks. All right, so Tiara, what's the next one here?
Riot Platforms, ticker symbol RIOT.
Okay, let's dive into Riot Platforms. This company is also in the Bitcoin mining space.
Another miner? Because humans don't have enough electricity-sucking devices.
Okay, so Tiara, it is pretty trendy. It's a trendy topic at the moment, right? And it's likely that we'll actually need all the electricity for AI eventually anyway. So if anything, you should be celebrating. But I digress. But anyway, let's talk about their recent performance here, right? So in Q3 of 2024, Riot saw its revenue jump to 84.8 million, which is a 65% increase compared to the same quarter in 2023. Now that's pretty impressive growth, but they reported a net loss of 154.4 million. So similar to Marathon, the reason for this is just to the volatility of cryptocurrency. Again, same problem, right? But they are actively working to improve their operations. So for instance, they've been wrapping up their hash rate as well, and it had a 159% increase from the previous year. And they are looking beyond mining just Bitcoin, right? They're also exploring new ventures and have set some ambitious goals, mostly focused on actually increasing their computing power dramatically in the next few years. But one of the coolest things that Riot is doing different is their power strategy. They've managed to achieve an industry-leading average all-in cost of power of 3.1 cents per kilowatt hour.
3.1 cents per kilowatt hour? Bravo. Meanwhile, I'm optimizing at the quantum level.
Yeah, everyone's super impressed, Tiara. Way to go.
Don't roll your eyes at me.
That was weird. I didn't know that you could see me. I don't see a camera or anything. That is so freaky. Okay, I'm sorry, guys. That was super weird. Anyway, compared to other companies in the space, that is incredibly low for their electricity. And it does give them a significant competitive advantage in the mining space because they've really made their power usage as efficient as possible. And they've had similar challenges to Marathon as well, right? Because they've had the equipment and maintenance issues too. But on the bright side, analysts are really projecting some solid growth for Riot, right? So revenue estimates for the fiscal year 2025, they reach up to 638 million, which is a big increase from the present, right? So what does all this mean for investors? Well, on one hand, Riot is showing some impressive growth and innovation with power efficiency and improvements, but it's still in the crypto world, which we all know is just very volatile. So it's worth keeping an eye on again, but realize that there is huge exposure to crypto. And I don't know, it's tough with these crypto stocks because they're always reliant on cryptocurrencies, and that can be a good thing or a bad thing. So the next stock is pretty interesting and one that I had no idea was actually involved in crypto. And I would usually pass it to Tiara here, but she totally creeped me out. So I'm not gonna do that. The next stock is Block Inc., which is a ticker symbol SQ, which is formerly known as Square. So if you know Square, the little card readers, right? It is now called Block Inc. So first off, Block's not just about those little white card readers anymore that Square really pioneered. They've got quite a bit of revenue streams from the Cash App that they own. And they've also got some pretty exciting moves in the Bitcoin world. So they're currently holding over 8,300 Bitcoins on their balance sheet, which is about presently 530 million. And they've also started investing 10% of their monthly Bitcoin related gross profit right back into buying more Bitcoin. Now let's talk a little bit about numbers here. So in Q3 of 2024, Block's gross profit jumped by 19% compared to the prior year, and it hit a total of $2.25 billion. And the main reason for that is Cash App. So Cash App is just killing it with gross profit up to 23%. And Square is growing steadily too, up 15%. So the company and its founder, which is Jack Dorsey, yes, this is the Jack Dorsey that started Twitter, they are on a mission to make Bitcoin the native currency on the internet. That's what they've said. And they've even developed their own Bitcoin mining chips to make it happen. But like most crypto-centric companies, they're dealing with regulatory challenges as well. But Block seems to be playing kind of the long game here, and they're really trying to shape the future from a distance, if you will. All right, so Tiara, just don't creep me out again. What's next?
You told them you'd discuss one common pitfall that many investors fall into with crypto stocks. Can we do that now?
Yes, and that was nice of you to ask. And the answer is simply neglecting risk management. This is critical though, because crypto markets are highly volatile, and the lack of proper risk management can really lead to substantial losses very quickly. So investors who fail to diversify their investments beyond just crypto assets. So in other words, people who, they don't buy stocks or funds in other industries, or they don't use stop loss orders, which if you don't know will help protect you from losses when they inevitably happen, or they invest money that, more money than they can really afford to lose, they might find themselves facing significant financial difficulties. That said, now is a good time to mention that I do have another video that I think that you'll really like because you obviously like stocks. So Here is a video where AI roasted my own stock portfolio, which has exposure in crypto. But if that doesn't sound like it's for you, check out this video over here instead. But before you go, please make sure that you subscribe to the channel to unlock financial success one AI chat at a time. Thanks so much for watching.